Okay, let's make a brief study on SONS. This is the chart since the IPO, which happened back in 2000 at about $12 or so. The stock shoots very high to an all-time high of $90, then it collapsed to almost zero, and now it is trying to push back higher again. Over the medium term, we have this $10 resistance level here, and the stock has been trading sideways, as you can see. Somewhat bullish recently above the 50 days and the 200 days moving averages. Over the short term, we have this 8.78 resistance level, and the stock has also this ascending trend line. So over the short term it is bullish, but it should really break out above this 8.78 level. As for the fundamentals, we'll jump right away to the valuation model. For the next 3 years, the initial share price is 8.5. The share count we have now, the last one we have because the company delayed its 10K form for the 10Q form for Q1 2007. So we have this share count of 252 million for Q4 2006. I estimate the share count will rise about 1% a year going forward. That's what has been happening over the past 4 years or so, as you can see here. Let me see. Yes, in 2003 we had 244.8 million shares outstanding and 252 million now, so rising about 1% a year. Prior to that, there was a lot of dilution. That's why, part of the reason why the stock collapsed as much as it did. Okay, now initial revenue. This is the last 12 months revenue, which was $284 million. I estimate that revenues can grow about 35% a year for the next 3 years. And because this is according to analysts' estimates that I have here on Yahoo, where is this? 347 million for 07 and 432 million for 08. Perhaps I'm even being a bit more optimistic here, considering 35% revenue CAGR, and even with this, the stock is not attractive, as we'll see next. This gives me a final revenue for 2009 of $712 million. Initial net profit margin. This is the profit margin the company had in Q1 2007, I believe. In Q1, just a second, let me pause. Okay. Well, not in Q1 2007. The company has not been reporting the net income numbers. But I estimate a 10% net profit margin over the long term, and this gives me a final net income estimate of $71 million and earnings per share of 27 cents for 2009. And considering the earnings per share multiple estimate of the industry average, which is just a second, competitors. SONS, as you can see, SONS is delinquent in its regulatory filings. Let's see if we have here competitors. Yes, the industry average of the communication equipment companies is 26.78 average PE. So I put that on my valuation model, and it says the stock will decline about 5% a year going forward. So definitely not attractive. On a 1 to 10 scale, I give it a 3. Okay, thanks, bye.